as we move along on our project number one, we've looked at the starting point, we've looked at the payroll for years 1 and 2 through 3. Now we go on to the sales forecast, and same thing. We've got year 1 and then years 2 through 3. Then we've got to do some things on the additional inputs tab, and we'll get to that. There's some things there that are definitive that you need to change that are fairly simple, and I think I can walk you through it. On the sales forecast, this is one, it can be a limitation of this particular template, and one that we need to consider. For some of you, maybe you're going to have product lines that are far more than the 6 that we have allotted here, and in that case you may have to do some combining or some averaging. Let's just, as an example, let's say you were doing a coffee shop. Well, you got just regular coffee, small, medium, large. You got lattes, small, medium, large. You got cappuccinos, on and on and on. So you'd quickly run out of space, and what you might have to do is instead say, here I've got coffee, my let's just put that in there, regular coffee. I'm going to sell it by the cup. This units is really a nothing. It's just a descriptive thing. You could leave it out in some cases, but so your sales price, you might just have to take an average, right? If the large is $2 and a medium's $1.50 and a small's $1, you might just say, I'm going to sell it for $1.50, and my cost on that is 35 cents. I hope you guys will go a little further and do a little bit of research on that to have an idea, which then tells me that I sell it for $1.50. My cost is there. I'm going to make $1.15 for each coffee cup that I sell on average. Okay, I could come down here then and just make an estimate of how many cups of coffee I might sell in a month, and that's think about this a little bit, I guess, is the best way to describe it. And remember, you might have cappuccinos and lattes and those things coming up as well. So we're talking about just the regular coffee. Well, if I sold 10 cups in a day, that would be, and I'm open for, Monday through Saturday. So I'm not open 30 days a month. I'm maybe open 25 or 26 days per month. So if I sell 10 a day, I'd sell 250, let's just say, at 25 days per month. It does the rest of the math for me. That says that in any given month, I'm going to sell that many. My total sales will be approximately that, and my margin's going to be $288. If I think those sales are going to be consistent, I can just extend that out. Yeah. I might think that I'm going to grow my business, though, and so maybe by month 3, I'm going to be up to 300. Maybe I'll do that for a few months, and then maybe I'm going to go to 350, and maybe that's kind of where I think it'll level off, so I'll just extend that out. Okay, that gives you a rough idea of just one product, and again, at the coffee shop, you might have a coffee, you might have fancy drinks, I don't know what else you would call them, but you could label it lattes, cappuccinos, frappuccinos, whatever, and again, put an average in those types of things. You might sell biscuits or whatever they sell at fancy coffee shops, and you could put those in there as well, or other items. Okay, so you might have to do some combining. Some people might have service types of businesses. Let's say you're going to mow lawns, and maybe you're going to charge by the hour. So we got lawn mowing. My units are, in this case, by the hour, and I'm going to charge $20 an hour. What's my cost? Well, this could be a little bit confusing on the a lawn mowing type of business, because you've got gasoline, you've got those types of things. But honestly, in this type of business, you could say that it's per unit or per hour, but we might just show that up when we get to the operating expenses as our supplies and whatnot. And I think that either way would be appropriate. The important thing here is don't double up. Don't say, well, it's going to cost me $5 worth of gas and whatnot, and then on your operating expenses have that same kind of a $5 type of thing. So, and in this case, I'm just going to go with 0. So I got lawn mowing, $20 an hour. Okay, if I estimate that in a normal week, maybe I'm going to do 20 lawns at an hour a piece, roughly. Got 4 weeks, let's say, in a month, roughly. So, I'd have about 80 hours per month. Okay, and same thing then. I digress. Let me go back and fix that because, in January, February, March, probably not going to do much. Maybe in April, I might get a couple weeks in of 20 hours a week. So I might only do 40 hours in April, and I might do 80 hours then in May. There's May, June, July, August. Yeah. September might go back to that kind of a 40 hour, and then again, it might be nothing in the later months. Okay. So I might have something like that then that's going to show up as a seasonal type of a project. The catch-all that we might be able to use for some businesses, you may find that you just don't fit in there at all. Had one in entrepreneurship, for example, and it's a service business, okay, and we don't know how to break it down by units. Well, the important thing then is let's just describe what my service is, and units, let's just leave that blank. That's fine. We can always put in here that my sales price is going to be $1 per unit, okay? And if my service business has no cost of goods, okay, then I can leave that at 0. Then all I have to do, if that's the case, is estimate what my sales are going to be per month. Maybe they're going to be 10 grand per month. Okay, I can make that kind of an estimate. I could stretch that out. Okay, and I could do it like that, and that would just be an estimate then of sales. Or if I were a convenience store, say, that had 1,000 different items, there's just no way I'm going to be able to put it in here. So I could say snacks, units, I don't know, right? Sales price, I'll just leave that at $1, but my average cost of snacks and whatnot's 50 cents. I can put that in there. I estimate my sales might be $10,000 per month, so now my cost of goods $5,000, and away I go. I'll extend that out so it covers the full year. Looks good. Maybe I got soda, maybe I got beer. Okay. To make some real broad categories that might fit then and fit within that 6 spaces that we have. Okay. And I just showed one product, but let's say we do beer. Okay. Units. I might sell 6-packs, I might sell cold packs, I might sell individuals. So again, I might just put in here, $1, and my cost of goods on beer is probably more like 65%. So I'll put in 65 cents, and I'm going to sell $20,000 worth of beer every month. And I can just extend that out then. And that may be seasonal. You might sell more beer in the summer. I don't know. But, okay, that, you might have to mess around with that a little bit. If you have any questions about your specific type of business, let me know, and we'll take a look at it. We'll figure it out. If you see down here at the bottom, and this is kind of what's important to look at, and I get some of these that are turned in, and it's like just it doesn't even make sense, right? And so come and look at the bottom and say, does that number kind of make sense based on what I'm doing? And for a lot of people, it might be very different. If many of you chose a very simple business like I recommended, and so your lawn mowing business for the 4 or 5 summer months or 6 months that you might do it might have a total margin of $14,000. May be perfectly appropriate. It may be more of a part-time thing that you're looking at doing during the summer or something. Okay, so just try to look at this and see if it makes sense for your business, and likewise make sure it kind of makes sense for your payroll. Let's go back. So if my total margin down here was the $14,000 on that lawn mowing, but I'm paying employees $20,000 over here, that doesn't make any sense. Okay, and I'll quickly send you back a note that says that doesn't make any sense. So take a look at those yourself, kind of compare them. You're also going to have some operating expenses too, and we don't know what those are yet. Okay, but you're going to need to have enough margin here to cover those operating expenses. Sales forecast years 2 and 3. You'll notice that these are all gold, meaning that we could change them, but we don't necessarily have to. By default, it's got a 10% increase up here. Again, if you want to keep it simple, you could certainly change these. If you think 10% is a little aggressive, you could change those to 5%, and maybe you're done. Okay. Maybe you think that 10% wasn't enough, and you're going to increase it by 25%. You're done. You can see as I did that, it automatically updated those things. Okay. You'd be done with years 2 and 3. Yeah, there's some rare exceptions where the type of business that you have, we might have to come in and make some seasonal adjustments or something like that. Again, if you think you need to do that and you're not sure how to do it, go ahead and let me know, and we can walk you through your specific example. But years 2 through 3 should be fairly simple. Again, you might scroll down, make sure you got a reasonable number there. I can scroll over and make sure I have kind of a reasonable looking number there. Additional inputs. Okay, this is there's a few things on here that need to be done, probably, maybe, depends on each business. This is percent of collections or accounts receivable. For many of you, this is going to be perfectly appropriate to just leave it like this. Okay? Again, if you're running a coffee shop, what happens? Somebody comes in, they buy a cup of coffee, they either pay you cash, write you a check, or give you a debit or credit card, meaning that you're getting paid right away and certainly within 30 days. Okay, if you were running a diesel mechanic shop, okay, it might be a little different. You might have some customers and you work on their outfit, and they pay you right away. Maybe that's just the independent guys, and so 50% of them pay you right away. But you might also have contracts, say, with the public schools or another company, and so you finish that, you're actually going to send them out a bill, which takes you a week. They get it, you give them 30 days to pay, so you're going to get paid from them maybe between 30 and 60 days. So we got to leave that at 40%, we'll say, and then maybe the other 10% or so are going to pay you in over 60 days, just because they're a little slow. I used to have some customers, for example, way back when I was at the bank, and they did a lot of work for BNSF. Great work. They weren't ever concerned about ultimately getting paid, but a lot of times they didn't get paid until over 90 days, and they'd ask me what to do. I'd say, just make sure you charge enough to make it worth your while if you have to wait that long. Okay. Now, you could, we don't want this allowance for bad debt probably to be 10%. That would be a tough business, but there might be some allowance for bad debt. Some of these folks, you might work on their outfit and not get paid, so maybe let's make that 8%. And then I got a 2% allowance for bad debt. That might make sense. If I want to do the same for all 3 years, which would make sense also, I can change that. Okay. Again, for a lot of you in the types of business, if you're mowing lawns, you're probably going to get paid when you get done mowing the lawn once a week, right? And maybe not. Maybe you're going to send out some bills and they'll pay you at the end of the month, and that's up to you. But you could certainly make those changes. And it'll automatically do the math here at the 100%. But be cautious that you don't get this allowance for bad debt to be too big, or that'll really screw up your cash flows and profit. Okay. Accounts payable, again, how are you going to pay your debt? And for most of us, if you're, if you're doing the lawn business, you're going to go down and buy gas, fill up your gas tanks, and maybe a little oil, and maybe some garbage bags and those types of things. You're probably just going to get them at the local Walmart or North 40 or whatever, and you're going to pay for them at the time of purchase. And so 100% across here may be perfectly normal. Again, if you're that diesel shop, you're probably going to pay for some of those things very much right up front. But some of those you order some parts from the local Napa, and again, They put it on your account. They send you out a bill. It may well be between that 30 and 60 days. So you might have a 75, 25. Just as an example, it could be even a little different than that. And again, we change that and extend that over. As you go down, you'll find there'll probably be some numbers that fill in here that are from your real estate leasehold improvements or these categories. And that's fine. You can see there's orange, but you don't have to put anything in here, and the vast majority of you will not. Okay, you will not put anything in here. Okay, this is only for if you anticipated either in the first year, one of those months, or maybe a total in year 2 or a total in year 3, you anticipated that you may need to purchase more of these things. Okay, not many of you are going to purchase more real estate or make more leasehold improvements. Okay, maybe equipment. Again, probably not for most of you. If you're doing the lawn mowing business and you say in year 3, you're going to expand, and so you need to buy a, riding lawnmower for $2,500. Fine, you'd put $2,500 there. Okay, for most of us, we're just going to leave this blank, and that's fine. Okay, if you've got something that you think you're going to add in the ensuing years, that's fine. You could put something in there. Usually when I find fault with these, somebody's come in here and just peppered this thing with all kinds of stuff that just doesn't make any sense. So effective income tax rate, they've got it to 0. That's a good change. So most of our businesses are called pass-through, that we would have a pass-through entity. Very few of you would form a C corporations. Okay, C corporations are typically, can't say always, but typically the only entity that pays taxes separately. Okay, most businesses, they pass through the income or losses to the owner or owners, be it a partnership, a sole proprietorship, a limited partnership, a limited liability partnership, or the most common recent one are LLCs, or limited liability companies. Okay, and so leaving this at 0 is perfectly appropriate because the business isn't going to pay taxes. You as an individual very well may. Okay, one thing I do want you to do, and I want everybody to do, please do this so I don't have to send you back a note and say you have to change that. Change this amortization period from 3 to 1. Okay, why? Just kind of a learning moment here. So you're going to do these startup costs here, your opening salaries, prepaid insurance, legal and accounting. Most of these are expenses that are right up front that need to occur and need to be recognized in the first year. If this is at 3, what it's going to do is it's going to actually spread those expenses out. It's probably perfectly legal to do that over a 3-year period of time. Most of us would say we don't want to do that because we want to go ahead and take those expenses and get the tax benefit that we would get from recognizing those expenses in the first year. And bigger items, like your equipment and those types of things, are depreciated out over several years already. Okay, so it's really just these starting points. There might be some cases, in these, if these were huge, if it took you $100,000 to get your legal and stuff set up, you might amortize that over 3 years, right? Most of us, again, we're keeping it simple, and so there's no way that we would extend that out over 3 years. We just want it to be 1 year, and we're good. Okay, so there's your sales forecast and that additional inputs. If you have, I think the most questions that might come up are some of these on the sales forecast. And again, if you're in your individual circumstances have a question, please let me know, and we can work through it. If we need a phone conference or a Zoom conference, we can sure set that up. Thanks, and have a good day.